You're getting high demand, shrinking if non-existent supply, and a crisis. So I reason that we're about to see a jettison, release, launch in the gold and silver prices.
Hello there, my friends. Chris Marcus here with you for Arcadia Economics. And I hope you're ready for a great episode tonight because Jim Willie is about to dig into the gold and silver markets and a lot of the fascinating things that he sees happening. If you're in the gold and silver space, I think you're definitely going to want to stay tuned and see what he has to say. And also real quick before we start, this video is again sponsored by Miles Franklin, where Andy Scheckman has been kind enough to match or beat any price in the country for our audience. So if you'd like a price quote or more information on anything, welcome to email arcadia@milesfranklin.com, and Andy will be sure to help you out. And actually, if you put Jim Willie in the subject headline, any order that has that, a portion of the proceeds will go not only to support the show, but also Jim as well. So if you do really like hearing from him, this is a way that, if you're already going to buy or sell gold or silver, you are able to help him out. So again, that address is Arcadia@milesfranklin. And now let's get to Jim talking about gold and silver. I'm hoping you'll dig into gold and silver for us a bit today.
Yes.
And just wanted to mention that because that helps to allow you to continue to do that. So I'll stop and let you take it from there, my friend.
Okay, a month ago, I'm fixing a broken fingernail. I'm a fidgety guy. I don't care to admit that. I'm a fidgety guy, and I don't.
I think we noticed a little bit.
When they tell me don't touch your face, I say, "What do you mean? Could you please explain that?" And they say, "Don't hug your friends. Maintain a 1.5 meter distance." I said, "No, my social distance is 1 millimeter. If you don't like it, arrest me." I've got a good mind to use Victoria's Secret women's panties as a face mask with my bicycle helmet to roam around and just let them know how stupid I think they are. Okay, we've got a phenomenon that I expected to arrive, and it did. 2 months ago, we started seeing damage to the crude oil market. And a lot of blame went to shale, the oversupply for the shale sector. And I said, well, how can you ignore the lower demand from a global economic recession that's in its 14th year? That's what I think we have, 14 consecutive years of economic recession in the United States. It's anywhere between -4 and -7% for a given year, 14 consecutive years. And if you think I'm making it up, check the John Williams shadow government statistics, and he will verify that. Okay, so I noticed that in late February and early March, we were starting to see the dynamics that might produce negative oil price. And many people, detractors, I got a couple emails back to me, Jim, that's totally absurd. It's a physical commodity. And I said, yeah, well, so's a house, but the mortgage finance seemed to dominate that market. Now I think what you're going to see is the petrodollar dismantling of contract derivatives maybe direct the price of oil negative. And we started to see it pretty soon in March, late March, I think. What we did was we saw the shale producers offer a negative price, offering money to any client that would take the output because they did not want to deal with the storage costs. In other words, what you're dealing with is the shale producers had a cost that they wanted to forego. And it was the storage cost, and they were full up because there wasn't sufficient demand. And then I reasoned, well, this is just the start. With the calling home of the dollars and the debts, they're also going to be liquidating and dismantling the derivatives, and that includes the petrodollars. And that is a big multi-trillion-dollar business where they link the major Forex currencies like the IMF's basket, the dollar, the euro, the pound, the yen, and now the yuan from China, RMB. Um, and in that mix is the Swiss franc, but not in an official capacity. Okay, they link it with the crude oil price. And then I saw a torpedo fired from the Kremlin where they said, we're not going to cut output, screw you. What they did was they smelled blood. The Russian shark smelled blood from the Americans in the water, and they decided, let's just turn up the heat. So they did, and there we go. I got to admit, I was a little shocked, Chris. I saw a minus 24 print for the oil price, and then I saw a minus 42 print for the oil price, or minus 40. So I started digging more, and asking one of my colleagues who's all over this. I said, explain to me some of the nuances. And he said, sure. What they're doing is they're figuring that this shutdown is not going to last very long. So what they're doing is they're selling the current month and buying June or buying September and creating a contango. But what they're really doing is they're slamming the current month. And you're not going to get the benefit in a big way with gasoline prices. It doesn't work that way. So it's far more complicated than just buying the current month, because they buy 3 months forward, because they've got to do refinery function. And it's just not that simple, not that immediate. Okay, so what you're seeing is lower demand, higher supply, and full supply centers. Switch to oil. You're getting high demand, totally opposite. High demand, shrinking if non-existent supply, and a crisis. So I reason that we're about to see a jettison, release, launch in the gold and silver prices for the same phenomenon and reasons that we're seeing negative crude oil price. The same phenomena working in reverse. And you've got things like events like 2 US, UK banks backing out of the COMEX system. That was 2 months ago. And I think their losses got patched over. But now analysts like Alistair McLeod of Gold Money, he's reporting things like the COT, Commitment of Traders report, has a phenomenon that is not new and has been quite evident for the last 6 months.
Yep.
The open interest is rising, but when the gold price comes down, the open interest does not come down. There's no liquidation. What you're getting is a churning. You're getting some entities covering their positions, but others are coming in to buy and replace. So you're not getting a reduction in open interest. And what it translates to is a vice squeezing the bank cabal's testicalia. And that's a good thing, because they don't need them anymore. And it's going to result in a release of the gold price. I don't know when. I'm beginning to see how, and I'm not sure where. But it's coming. It's going to be exciting. Go ahead.
I mean, it's on some level, it seems like it's even happening now, where we're getting, announced again. I did hear that a couple people reported that 2 market makers got blown out on the LBMA on March 24th. They're getting liquidity announcements. I also found it interesting to read the other day that it said most of the COMEX deliveries are being supplied by the Perth Mint, which I found interesting. Again, I mentioned I do have a partnership with Miles Franklin, and Andy told me that the majority of the product they're getting is coming from the Perth Mint. I'm like, what kind of exchange is this, where it's like now the whole world is dependent on one mint? I mean, that seems kind of vulnerable. And then we get, bars flying between New York and London. They can't find insurance. It's like a Three Stooges routine going on. And
the Chinese are supplying some also. And I think we got some big deals being cut here. Like, we'll help you with this, you help us with that, we'll get through this together, and we're going to help you buy some time in your gold market. Something big is going on with the horse trading, as they like to call it.
Yep.
where I think we're heading. I want to get some more information on the hiccups and the snafus from you offline.
Hmm.
But where I think we're heading is that the COMEX is going to be irrelevant. There, I mean, if you've got a store and they say, well, we got a really great price for a big screen 48-inch plasma TV, and you walk in, they, well, we don't have any. Well, you got a nice price. Yeah, well, we don't have any. You don't go back to that store. They become irrelevant. And that's what's happening with the COMEX and the LBMA. And they've completed their deal with the falsification of delivery and the papering over of all that nonsense with exchange for physical. They've really shown their true criminal colors of deep, deep corruption. Where I think we're heading to, Chris, is multiple price points. It's not going to be a London gold fix, which is just completely corrupted and centralized. We're going to have a decentralized gold price where it'll be Hong Kong, Singapore, Shanghai, Moscow, Zurich, London, maybe Frankfurt, New York, Toronto, Sydney, and they're all going to have a price. It's going to be about 10 of them. And what I'm hoping to see is that we get 10 independent prices and they reflect shortages at the local level. In other words, you get price movements where there's shortages. And there's a group that decides, let's just canvass this and report the average and report them all, but report the average, and that'll be kind of a consensus gold price. By the time they do that, I think we'll be at $2,500 gold and higher. By the time they do that, I think we'll be at 35 silver and higher.
Yep.
So we've got to reduce this gold silver price ratio. We need to get it back down to something even half crazy, like 70 to 1. And then we need to make a serious effort with equilibrium and supply and rules. We need to get it to something simple like 40 to 1, 30 to 1. And the voice actually thinks that we're going to be seeing 25 to 1, like 10,000 gold and 400 silver, 25 to 1. I'll be happy to see 50 and 60 to 1. We got to get there. We got to get there first.
And
But
Jim is interesting. Actually, if you look at the prices, if you want to actually buy physical metal, at least a retail person today, there, at least as of a week ago, last time I checked, the ratio of physical metal is already in the 70s.
Well, that's interesting and fun. I smile when I hear stories like that, because what I think is coming is some of these dealers are going to dispatch agents, consultants, and fellow dealers to go out there into the wild, like to estate sales, to organize fairs, and they're going to start offering something between the corrupted sale price and the upper price for buying that includes the premium. I'll give an example. Right now, gold is something on the order of $1,750, but maybe about $1,900 to buy.
Yep.
Roughly. Somebody's going to step in there and say, we'll offer $1,850. We'll offer $1,800 and a quarter, $1,820. We'll offer that if you can supply us a good 100 coins of gold. And for silver, it's something on the order of 17 by 25, 16 by 25. There's going to be an intermediary agent that comes in and says, if you got a bunch of silver coins, we'll buy them up. We'll pay 19 and 20, because the dealers need supply. It's an industry, it's a sector that's vanishing quickly, and we can't have that. And they won't let it happen. So, it's kind of like the evolution of the black market. It'll happen. Why? Because it has to preserve the integrity of the market and the continuation of the market. I'm just speaking capitalism 202. You know what I mean?
And speaking of which, it's pretty exciting. Actually, as we've been recording the interview, we see a felony in action here in the silver price. I wondered, like, the Department of Justice, where have these guys been with this investigation now running around 2 years, and where you routinely see this? And I understand gold and silver are correlated, but how is it every time we see this same trade in both of these metals at the same time? So exactly what you're talking about is again playing out today.
Well, they're playing games with paper. Uh, there's no law to enforce. The CFTC chairman and director, or whatever they call them, the head, they're all just, former bankers. They're assigned their posts because they promised to not do anything. You know, they're going to become irrelevant. I'm looking forward to the absurdity. The absurdity is what will break them. And I've got a joke. Speaking of absurdity, if you look at some of these geometric growth paths for corona cases in New York City, by gum, in 6 months, we're going to have 100 million cases. Okay, well, let's just carry it to the absurd and see where it breaks. People, rich people, financial entities, mid-size and large, they're going to want to acquire gold, and they're going to pay up for it. So we've got a mission for the intermediaries. Get out there and find supply. And there's going to be a profit in it. So I think it's happening now. I don't think this is going to be, oh gosh, by the end of the year, we should see it happening. No, by the end of the year, you're going to be hearing about it. Because it's happening.
Think so. And I'm curious, have you heard there's been, I'll be clear to label this a rumor, it's not confirmed. I'm curious if maybe you can confirm it. There's been a couple people suggesting that the US Mint may start bidding 50 cents over spot for silver, which I'm curious if you've heard of that. And also because along the lines of what you said of making the COMEX irrelevant, I mean, that's happening now because the bullion dealers are paying over spot. So it's almost as if like there's the Chris price where, I don't know, maybe I think silver should be $75, but people are going to pay the offer. They're going to get it wherever it's actually trading. And I mean, at some point I guess we'll find out if there really is any physical delivery to the COMEX,
Chris,
because there's an arm on the board.
This is how it breaks. The Mint's doing an end around. They're doing a bypass. The dealers are not honoring the suppressed price for selling. The bid ask is widening. Anytime you see an enormous bid ask spread, you've either got a tremendous shortage or a tremendous corruption. And I think this is basically a tremendous corruption with a face of shortage on it. We can address the shortage. All we need to do is get rid of the corruption. We need the intermediaries to step in. I'd love to see, like Dubai or Moscow step in and say, we got our own gold and silver game going. And we're not at 15 for silver. We're at 19 right now. Come on down. Mm-hmm. Sell us your silver, because we can sell it for a profit even though we buy it at 19. That's where rubber hits the road and the COMEX breaks. I'm told by one of my colleagues that the COMEX is doing their dead level best to keep quiet some lawsuits right now. I wish them the worst. I would like to see them suffer class action suits and shut down. But they've probably got some kind of legal immunity written in that we don't know about. It might be in the fine print of futures contracts. Yep. You can't sue them for corruption, kind of like the big pharma. So anyway, well, thanks for having me on, Chris. Got to wind this down. I want to follow up with a phone number after we're done. We're in dangerous and scary times. And if I said that I sleep normally and no problem and eat my meals with no indigestion, I'd be a liar. And these are dangerous times. So I invite people to sign up for the newsletter, make a donation, help me out, sign up for a consult session. There's no commitment to repeat a consult session, but obviously the subscriptions are ongoing renewal, which is the way we set it up. But people need to be getting informed, because if they're not informed, you've got some perhaps life savings at risk. this is not going to end pretty.
Yeah, and Jim, perhaps just one final question before we wrap up. Something I've been thinking about a lot where to be clear, I don't have any specific smoking gun to point to that, the reset is being planned or is underway. Although I wonder, gee, if there were a reset happening, wouldn't you think this is kind of what it would look like? So any thoughts on that? And then we can close up.
I was given a year and a half ago a warning by The Voice. The reset has started. He said the reset started in late 2018. In early 2019, he said we're into some middle steps for the reset. And I said, is that mean, dumping the treasuries, sending them back for redemption? And he said, well, yeah, but many other things that you don't maybe think about. I mean, you mean like retiring the petrodollar? And he said, yeah, the derivatives have to be unwound. You cannot do a reset with all the derivatives tying things up. It's for me, if I made an analogy, it's like, okay, I need to get off the couch and start running again. But I can't because I've got all kinds of rope around me. The rope is the derivatives. And you don't just burn them. You don't just cut them. You have to dismantle them and set them aside. And where you do, you get big waves and tsunamis. They don't just go away. They've got the effect of mass. The effect of mass. Okay, so, yeah, this is the reset. And the problem that I see is I don't know how many months and I don't know how many steps. All we have to do is look for evidence of liquidation of derivatives. Okay, you see it in the negative crude oil. Okay, and therefore there's a flip side of that. It's going to be the release of the gold. Until we see the release of the gold and silver prices, I don't think we're anywhere near the conclusion. Yep. And then you have to hear about what's going to happen to all the wealth that's sitting around in stocks, bonds, and cash and CDs. What's going to happen to it? I got some people who have extreme opinions say, well, it's all got to go to zero. Nothing can transfer to the new system. And I say, oh, I don't know about that. You can have lots of different provisions, like a 50% haircut, and it'll be backed up by some tremendous gold trove that facilitates the transition. There are lots of things that can happen. And that's the sort of stuff I'll be talking in the newsletter for the coming months. This is nowhere near all laid out and clear. So thanks for having me on. I hope people go to golden-jackass.com, sign up, make a donation, make a consulting fee. I do my best. I've got a lot of information. I'm a bit overwhelmed, but that's a good thing. I'd rather be overwhelmed than to be, searching for any kind of useful information. No, what I do is I'm sorting and I push to the side. Okay, yeah, we know the jobs claims are bad. Yeah, we know there's a lot of unemployment. Yeah, we know the supply chain is hurting. So, I don't cover that a lot. That's kind of a given. So thanks for having me on, and it's been fun as always, Chris, and I wish you the best.
Well, I sure appreciate that, my friend. I think I can speak on behalf of the audience and the comments that I've seen come in. People love hearing from you. Information you really can't get anywhere else. So with that said, it's been a pleasure having you on as always. We will look forward to doing this again soon, and you take good care of yourself, sir, and we'll catch up again soon.
Okay.
So that was part 2 of my interview with Jim Willie. I do sure hope you enjoyed that. I get giddy actually and excited on the days that he's coming on because it's always a lot of fun. So go ahead, hit that subscribe button and the notification bell. That way you'll know when Jim is coming on again. And if you'd like more coverage and explanation of what's happening to the metals, actually on a physical level that doesn't get reported in the mainstream news, well, here you go.